Hello, good afternoon, and it's a pleasure. So in the morning we took AUD and in this afternoon I'm looking at gold. So let's do this. Let's look at the gold analysis. So I'm expecting a drop on gold against the United States dollar, and yes, just like you see, I've decided to enter ahead of time, but we are expecting at exactly 8 o'clock in the morning, the New York time, to have a drop. However, this was a good entry, okay, up here on gold. We had this small entry. Then we are having another one. So let's wait for another retracement back up. Then we push it lower. Okay. So let's keep waiting. Let's wait and see if we are going to. But I'm waiting for this drop on gold at exactly 8 o'clock in the morning, the New York time. Okay. Okay, let me edit the title on YouTube, then I come back. Okay, so let's do this. First things first. Which other currency pair? Let me first delete all these. Then we 2, 3, 4, 5, 6, 7. Yesterday we sold the dollar against the Japanese yen. We're also looking at the Australian dollar against the Japanese yen. Then, as soon as these other currencies start going up, we should also wait for gold to be dropping. Okay, so let's wait. This is a confirmation I have on gold, and remember, long term we are bearish on gold. So this is a daily time frame. So today we traded above old highs. Okay, today we traded above old highs on gold. So as soon as we traded above old highs, now if we go back to a weekly time frame, you're going to see that we've traded above weekly highs as well. Let me disable the trade history. So in most cases, this is what we are looking for. Okay, in most cases, we are only looking for price trading above weekly highs and lows. And if you remember, there is a stream we had, and I talked about the same thing. I told you that the only thing that we will do on gold is we wait for the weekly candle to trade above a weekly high for us to sell, because it was a downtrend. AUD or gold in a Muvako, my sell zone is 2049. Okay, 2049, but 2049 is too far. Okay, so we've traded above a weekly high on gold. Okay, we've traded above a weekly high on gold. And I remember now this is a downtrend. How do you know that it's a downtrend? We keep taking lows, okay? So that means we traded below this low here. You remember, we traded below this low. Then we traded below another low. Now this is price action basically. This is price action basically. So we are looking at what price is doing. Okay, so after all these lows have been taken, we are only left with one high which was taken. However much, we also have these other highs up here. Okay, we also have high 1, but the most important thing is weekly highs and lows. Okay, so up here I'm looking for a drop above this weekly high which we just traded above, right about here. Let me mark the area. that zone. Okay, so go back to the 1 hour time frame, and you see that zone up there. You see the zone we traded into. We traded above the weekly high, which is this one here. Let me put my arrow there. You see this high here, this area. I'm using MentoredTrader, I'm not using TradingView. So you see that high, we traded above that high, and are we expecting a drop? We come for liquidity below, okay, down. However much, we still have a few other highs to take. We still have a few other weekly highs that we did not touch. But if you're looking for entries, you just look for an entry. As soon as we trade above a weekly high, boom, you're going back down. Okay, so if we take these lows, if we do this, okay, we might maybe also want to go back up. But trust me, gold has started selling. It's a drop. Okay, gold is dropping. No, Maurice, the problem is what you do with gold, you don't just trade gold anyhow. What you do is you wait for it to trade above weekly highs and weekly lows, then you enter. You don't just enter because of entering. Gold has its specific time. You look for volume and imbalance on gold, then you're good to go. Most especially above weekly highs and lows. Trust me, there is a lot of we have a lot of opportunities for price to reverse. Not only gold, but other currency pairs as well. Okay, so AUD-JPY is doing well so far. For those holding AUD-JPY like I am doing, I'm going to close it at exactly 8 o'clock in the morning as I wait for the magic to happen on gold. Okay, as I wait for the magic to happen on gold, I'm going to close AUD-JPY, which we started trading in the morning. Then I don't usually do afternoon sessions because of my busy schedule, but once I get an opportunity, why not? Once I get an opportunity, why not stream and share a few things with you? Okay, let's wait for the next 1 hour. Yes, for the next 1 hour. So let's see if we're going to leave the stream going on. But what we're doing is, if you're to get that manipulation, we've already traded above this high, which is very important. Go back to the weekly time frame and go back to the other streams that we had. The stream we had last week on Monday. Okay, the stream we had last week on Monday, we talked about this same thing here. So you're looking at weekly highs and lows only. Okay, that's where you're looking for liquidity. Liquidity above weekly highs, liquidity below weekly. Which other currency pairs should we analyze? Let me see. You give me the pair, we go through it. You give me the pair, then we go through it, and we see. So I'm waiting. I'm going to play the track until I get enough pairs. We go through the pairs together. Okay, we have Mr. Fatuma GBP USD. Let's look at GBP USD. I think we only have two people. GBP USD. So let's look at GBP USD. GBP USD is actually selling. It is in a downtrend. Okay, GBP USD is selling long term. That's one thing I would actually say. GBP USD is GBP USD is long. It's still selling. It's still going down. What I love doing is this. Okay, I don't love chasing price. What do I mean by chasing price? Entering from the middle. You know, you find price here and you're pushing it lower. No, that is gambling. That's not trading. What I love doing is getting an entry like on top here, then I execute a trade while price is still up here. Okay, these are the kind of entries I love. But what I hate is finding something already selling, then I follow it. No, and that's why on gold, however much it is leaving us, but what I'm doing, these are the entries I love. Okay, I want to enter from the extreme top as we drop. Okay, the extreme top, then we drop with it, not me finding price, you know, already buying, then I also enter for a sell. So GBP USD, if you didn't sell yesterday, you just let it go. Okay, you just let it go. There are so many, there are over 28 currency pairs. I don't do mentorship. I don't know private mentorship, Mr. Arnold. I don't do private mentorship. I don't really have the time to hold mentorship. I don't have the time. That's the problem. I don't have time for mentorship. Okay, that is GBP USD. So for gold's case, this is what I love. Entering from the extreme top, then we go direct together. Okay, so do not invest too much. Do not risk too much, and endeavor is a stop loss. Don't forget to use a stop loss. Okay, let's get this other person here. Okay, Mr. Euro GBP. Okay, let's analyze Euro GBP. Let's look at Euro GBP. Euro GBP. Yeah, what I don't do signals, doing mentorship, doing. So Euro GBP, it's buying. Okay, Euro GBP is buying, and I don't think we have any chances of it coming down anytime from now, anytime soon rather. So just let it go. Trust me, if you didn't enter from here, okay, if you didn't enter from here, then you should let it just go. Okay, not you chasing price, not you buying because it is buying. No, I've seen so many people do this. Price is buying and they're also having so many buys and buys and buys and buys. Okay, I'm going to close these orders. I'm going to close these orders. How do I close them? Okay, let me just I'm using a tighter lot size. Okay, they buy. You see the mistake? That is the mistake of you buying, you know, chasing price. You find price buying and you're ready, and you also, let's see, just put a stop loss anywhere like there. Then we modify. I'm using a tighter stop loss to demonstrate this. Let's just close them manually. Come here and close position. So close position. Oh, I closed gold instead. Ooh la la. So bad. I hope it does not. Okay, so let's keep watching this. 1 hour to go. Just have 1 full hour to go. Okay, let me see here. What do we have? As you know, it's hard to get good in this without a mentor. You have any advice? How can I go about this? Well, Mr. Arnold, What you do sometimes is this is a journey that you won't just complete in 1 year or 2 years. It takes time to make a greater trader. Use the videos we have on YouTube. We have great mentors around Kampala as well that do mentorship. Trust me, they make money, and I think they would also give you a hand. We have great men doing mentorship in Kampala. I think someone can give you a hand on doing that. Okay, Mr. Denise, Mr. Arnold. AUDJPY served well, thank you. Oh yeah, AUDJPY. You know, when I woke up in the morning at exactly 6 o'clock, at exactly 6 o'clock in the morning, I think, Ugandan local time, I saw an opportunity and decided to share it with you on YouTube. So let's see how YouTube gold is going to play out. Use a stop loss if you're going to execute a trade here, and use a tighter lot size. Do not be too greedy. Do not use a lot of do not the gold or your moli buy. I don't know why. Okay, you're buying gold, and it's still okay. It is still fine. We are all traders, Mr. NBA. You can still buy. It's okay. I'm not going to tell you to go against your setup. I'm not going to tell you to go against your setup. I am selling gold, and if you're buying, it's still okay. We are all traders with different with different views on the market. You buying does not mean I shouldn't sell, and me selling doesn't mean you shouldn't buy. Okay, yes, there we go. We just wait for you to trade a bit higher, then we give it a sell. Okay, let's have the Okay, by the way, the other thing that you have to do, you must have a risk to reward. Okay, you don't just enter the market. This is something I forgot to talk about. What you do, you must have a risk to reward. How much money are you willing to lose? It's not all about you taking a lot of money home. It's not all about you flipping account, but it's about you having a risk to reward. How much are you risking? You'll find a trader risking $1,000 for $10. Trust me, they are those people that I've seen. You find someone risking their whole account for fewer, dollars. So what you do, in my case, I don't have a risk yet. I don't have a stop loss yet, and this is why. So let me say, for example, one trade here is giving me $1,000 in profits. One position here is giving me $1,000 in profits. So if I want to take a 3-to-1, that means I'm going to risk $300. So this means I'm looking for $2,000 from here. So if it is a 3-to-1, I'm going to risk that will be $600. So I'm going to risk $300 per position. I have two positions, which equates to one lot because it's 0.5 each. So if I look for $300, stop loss, it's around there. You see that? Above that high. Okay, so if I put my stop loss there, this means I'm risking $300 for $1,000. Okay? It's not all about you having an open stop loss. No, I don't advise that. You must have a risk to reward. So if at all I'm having a 2-to-1, that means that I'll be risking $500 for $1,000, which is not really good. That is, I don't advise you doing that. It should at least be 3-to-1, 4-to-1, 5-to-1. 2-to-1 is a bit not good at all. Okay, it's also not good. So let me say, for example, I have a 3-to-1. So that means I'm going to risk $300 for $1,000. Okay, up there. Okay. And remember, above highs, we have liquidity. And remember, we haven't, the New York hasn't opened. That is something you also have to put in mind. New York hasn't opened. So above this high here, we might have a manipulation. That is if gold is to sell. If people like the big guys like NBA are not in the market to buy, if the big guys like NBA are not in the market to buy, if it's a sell, like we retail traders are expecting, then these guys will want to manipulate price above old highs. Reason being, remember, we are above a weekly high. This is above, we are above a weekly high. So this means if they want to still buy, if they want to still push price higher, that means above this high here, we have above this area. Trust me, there are so many stop losses here. Okay? There are so many stop losses up there. So what we do is this. In the next few minutes, at exactly 8 o'clock in the morning, or 8 o'clock in the morning, if we see price going higher, okay, this is something that you might risk. Because remember, trading is all about risking. You either come out with a blue or a red. You understand? You either come up with a profit or a loss, but we are not in the market to lose. We are in the market to earn kitu kidogo. So, what you do, don't put your stop loss here because they will kick it out. If price is to go down, then it will continue going down. That's why you see, I have over $2,700. Okay, $3,700. And I'm not using a bigger lot size. I'm not looking at flipping an account. Not because I don't know how to trade, but because anything is possible in the market. Imagine yourself being kicked out of the market, then price goes in your direction. What do you feel? Okay, so what you do, you risk little to make to earn at least times 2 times 3 what you are risking. Not you risking $1,000 for $10, or you risking $50 for $2, $3, $4. Okay, and the other thing is, trading is not all about the money, it's about the pips. How many pips are you taking home? Okay, so that's what you do. You must always have a risk to reward. But since it's not yet 8 o'clock or 8 o'clock, which we're actually approaching in a few minutes, so I'm going to leave it open. Reason being, in case price, in case we have a manipulation here, I don't want to be kicked out, then I end up losing my money if gold is selling. So what I do on this account, I'm going to risk at least $600 because I have 1,000, 3,700. So I'm going to risk $600. Okay, so that is $600 for how much? 600 for 1,600. Okay, 600 for 1,600. Modify. 600 for 1,600. So together that is $1,200 per all in total. So I'm going to get 600. Where is 600? Let's take 450 because 600 is too much. 450, 446. Let's have our stop loss there. Then we also modify this one and put our stop loss right there. So in total, I'm risking $1,000. That is too much on gold. For how much? For 1,600 times 2. Do the math. That is around 3,200. 3,200. Something like, yeah, $3,200. Okay. So you don't just jump in. No, you must have a reason, a risk to reward, not just you selling because you have to sell. You want to flip an account. No. So what happens is, if I go and come back tomorrow, just like we did on USD JPY yesterday, we sold, and at night, at exactly 10 o'clock in the night, Ugandan local time, we got, let's see, USD JPY. Oh, la la, it's not there. Where would it be? Okay, it's not there. I'm not seeing it. Dollar yen, dollar yen, dollar yen, dollar yen, USD JPY. Voila. So we sold from up here yesterday. Up here, we took, how many pips were there? There were 100 pips. Yes, that's what we're looking at yesterday. Okay, however much we got this other retracement up here, we got a few people buying here, then boom, we sold again. I closed here, in here, then I opened another position just after a few hours, because I had to increase on my equity. Okay, I had to increase on my equity. Then I closed, then opened again, and we dropped this long candle. If you remember, at exactly 10 o'clock Ugandan local time, we had the long candle going down. I don't know if most of you saw it. So here we are, and this is so you risk little for little. You don't risk much for little. You don't risk little for, you understand? Discipline is very important. You must be a disciplined trader at all cost. Okay, you must be disciplined at all cost. USD JPY is still going down because on long term, but yesterday was the distribution. The live session we had yesterday, but one at 2 o'clock at midnight. I still told you what to look at. So I'm looking at the same thing here on gold. AUD JPY, I was scalping, I wasn't holding long positions. So sometimes it's better to move with the market. You buy from top, you keep closing, you get another opportunity to sell, you execute a trade again, you wait for, you go with the market. So let's wait and see how this thing is going to play. We are live till 5 o'clock in the evening, Ugandan local time. Mr. Hope, okay, the name is a bit difficult for me, but the last comment, the current comment. What if you have 20,000 Ugandan shillings? What would you risk? Well, 20,000 Ugandan shillings, that is around $5, I guess. You shouldn't risk it all. You shouldn't risk it all. You risk something like $2. So $2, that is something like Kasamvu, Ugandan local currency. Okay, you risk at least that is around 20% of that money. Okay, you just risk you just risk Kasamvu. Don't risk Mutwalo. Mutwalo is half of that account. That is 50. So you risk 30%, and 30% is around Kasamvu Ugandan currency. Okay. We have 7 minutes to the New York Open, and we are pushing gold against the dollar, the United States dollar, down. Well, let's keep watching. So let's see how many put we have. We have price. So let's wait and see what is happening. As I see, we have a lot of volume to push this thing down. Do we have any news? Let me see. Ooh, okay, it's fine, it's okay. Okay, so make sure you have a risk to reward. Risk to reward is very important for a trader. Risk to reward is very important for a trader. Okay, so let's wait and see how it plays out. Just make sure that you don't use a bigger lot size, because gold is not like currencies. Gold is not like AUDNZD. You know, AUDNZD is the only currency pair that gives little money. Gold is very expensive, and silver, I personally love silver and US 30. I trade gold once in a while, not because it takes too much money, but I only trade gold once I have a confirmation like the one we have today. But I love trading silver more because it gives more money. It gives times 3 the money gold gives, and so does US 30. If we look at the volume we have in the market, if we just visit, let me see. We see right here, just a second. We are actually 5 minutes away, so remember that manipulation is supposed to happen. Okay, that manipulation, it's a must for the manipulation to happen. That's why you must have a stop loss and a proper risk management. Manipulation happens at the New York Open, or maybe at 8 o'clock, the New York time. So let's see what we have on volume here. Just a second. Okay, which time frame? Okay, this all. Then this other one. I think it's all 2. 1, then 30, 5 and 15. Save changes, then down. Okay, what do we have? So we bounced off. We bounced off at what time? At exactly 15:10. At 15:10 we had a push, whereby at 15:00 we had volume pushing price down. So however, what we see here, are we above 10? Probably. Okay, so let's have gold go a bit higher, then we sell. Okay, we are still pushing it lower. Just make sure you have a stop loss and a proper risk management. That's the only thing we have to do. We are going to have these streams every single time I get a confirmation. Twice a day, once a day, or even not trading at all. Once there is no confirmation, there is no streaming. Or if I still get a confirmation and if my environment does not allow me to stream, then we shall not stream. But once I have the gap to stream, we are good to go. So keep watching the market. I think we should have a microphone till which time frame am I using? I'm using 1 hour time frame. The chart is in which minute? Yes, it is 1 minute time frame. What's the best leverage for $10 account? I think you should use a 50, because that's safer. Not using unlimited leverage that I saw on the other broker. Exness has unlimited leverage. I don't advise you doing that. Being a trader, is totally different from being a gambler. Being a trader is totally different from being a gambler. So have value for money. That's the most important rule. The most important rule is for you to have a value for money. You must have value for money. Okay, so what do we have here? God bless you. God bless you too, Mr. Kasozi Charles, Uganda. God bless you too, Mr. Solomon. Okay, thanks. Yes, so 2 minutes to go. It's actually 1 minute, and I think we are now counting seconds. Okay, something like 50 seconds to the New York Open. Okay, remember, if you have your stop loss up here, it's not good, it's not safe, because you see what we have here. Okay, we might have it poof, trade through, then drop. Okay, so it's not good having your stop loss up there, because these people are looking for highs and lows. They are not just looking for, they're not just looking for anything. So if it drops, well and good, but remember, we are above a weekly high, and remember, we haven't traded through the weekly high as we are supposed to. However much we have a lot of liquidity down, but look up here, all these are weekly highs. Okay, and this is what these people are interested in. They are interested in weekly highs and lows. Okay, they're interested in weekly highs and lows. I am risking $1,200 for $3,200. So if they hit my stop loss, I'm out. Okay, so it's o'clock, so let's wait and see. We didn't have that manipulation. We didn't have that manipulation, which I was actually expecting a stronger manipulation. Okay, so let's just okay, you should expect a strong move. You should expect a strong move. How much volume do we have? How much volume? How much volume? How much volume? Let's see. $22 billion now. Okay, let me first look at how much volume we have. I'll play the soundtrack, then I'll